Is Bitcoin's blockchain broken? Its price dropped $1,000 after Binance halted withdrawals from its exchange, and they claimed it was because of pending transactions that was causing a huge spike in gas fees that made Bitcoin unmanageable.
Was Bitcoin under attack?
No, it's under the spell of meme coins. There's a new BRC20 standard where you can now mint meme coins on Bitcoin's blockchain.
So, that's what was causing the network congestion. Frogs have invaded the blockchain.
ROFL.
In my last video, I went over the downside targets for Bitcoin after it dropped below $27,750. And then it just chopped around sideways for the last few weeks. But here we are again where it drops below $27,750. And the downside targets are back in play. Sorry I didn't do an update during that whole sideways chop. I was busy with my NFT collection, working behind the scenes on some things, and also degenning into meme coins during that whole time. So feel free to follow me on Twitter to stay up to date with what I've been doing. Quick recap on the downside targets for Bitcoin. I originally brought out the Fibonacci Retracement tool and thought that Bitcoin could probably fall down to the 0.5 retracement level at around $24,000 and the 0.618 Fibonacci retracement level, which also has confluence with the 200-day simple moving average. And then after that, I brought out the Cyclic Lines tool. And as you can see from the floor to the next floor, you can see that Bitcoin is moving in 60-day cycles. So here we are right at the 60-day mark. And just like the previous cycle bottom where it landed on the 200-day simple moving average, it had maybe 2, 3, 4 days of downside action. So I'm expecting potentially the same thing. But the 0.618 might get front run and bounce off the 0.5 just because there is previous resistance right here, which may flip to support and bounce. On the GMX exchange, I did go into a short position last night just because Bitcoin fell below the 4-hour 200 exponential moving average and it lost key support. So I'm up 54% so far. And let's take a look at how I would go about taking profits on this trade. Besides using the Fibonacci retracement levels, I also like to use the Fibonacci Extension tool to determine my price targets for taking profits on a long or a short. And the first target I'd look at is the 1-to-1 right here at about 25,800 and the 1.618 at the 23,200 level. I actually wouldn't be surprised if Bitcoin dropped this low to the 1.618 and front run the 200-day simple moving average and as well as the 618. Just because there's a lot of previous resistance that would flip to support right here. And everyone who's been waiting to buy the dip will not be able to catch Bitcoin popping back up. The 1-to-1 would be an ABC Elliott wave correction. As you know, I believe that the charts are human emotions manifested into reality. And because price is based on human emotions, we love things that are in harmony and balance. And since we are at the very end of the 60-day cycle, it could just rip right down, similar to what it did in this previous cycle bottom. Even though I'm short-term bearish, I am long-term bullish because I do believe Bitcoin has bottomed out on this 4-year cycle. And I do think this will be left translated where we'll only have maybe from now 8 to 12 months of a bull run, and then it'll roll over for another 2 to 3 years. You'll have to take a look at my other video called Bull Market for 1 year on my channel to get in detail of why I think that's the case. But anyways,
we have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process.
In the last FOMC meeting, Federal Reserve Chairman Powell confirmed his original plan of not pivoting on interest rates until possibly next year. Even though rising interest rates are causing havoc in the economy, as you can see in this S&P 500 chart, as the interest rates are going up, you can see that the market is actually forward-looking and pricing in a reversal in interest rates in advance. The terrifying thing is that when the Fed does pivot and reverses interest rates down, the stock market does go down for 2 years. It happened in 2001 and 2007, and here we are in 2023, and Federal Reserve Chairman Powell said that he may not reverse interest rates until 2024. So that's where we get the left translated cycle.